There has been a lot of really exciting news surrounding two stocks that I have in my portfolio. And this news has made me really want to double down and buy more of these positions. So that's exactly what I'm going to do today. I'm firstly going to explain the news and tell you why I'm optimistic and why I want more of these stocks. And then I'm actually going to go into my ISA account and I'm physically going to do the investing with you guys live. I do all of my investing on a platform called Trading 212. So if you're in the market to set up an ISA account or a general investment account and you like the look of Trading 212, then I'll leave a link in the description below. Use that link and you will get a free share worth up to £100 and I will also get a free share. The first stock that I'm going to be buying more of today is one that I already have in my portfolio. It's Palantir. So you can see right here, I already have Palantir in my portfolio. Sorry for the numbers changing. The markets are currently open, or the US markets are currently open, I should say. And you can see that Palantir is quite a substantial chunk of my portfolio. Tesla is my largest position, but Palantir follows that in second place. I currently have 108.4 shares, but today I'm going to be adding even more. Well, firstly, I should say that I try not to invest based on emotion, but what I do try and do is make sure to keep up to date with the companies I'm investing into and sort of tailor my investing on the news that I see and any updates, CEO changes, anything that happens, financials, anything that happens within those companies. Perhaps there's been news that makes me more optimistic about a company. I think they're going to have a better growth in the future, whatever it may be. That does affect my investing. And there are quite a number of things recently that I've seen from Palantir that have made me really, really excited. Now, if these pieces of news didn't come out, I would still be buying this stock based on its fundamentals, based on everything I know already about this company. I won't go into too much detail there, otherwise this will be a very long video. I'm going to buy more today because of this news, as well as everything I already know. Anyway, without further ado, the first piece of news that has recently come out in the last, not that long ago, is their release of their new artificial intelligence platform, their new AIP. Now, this is a platform that is aimed to help companies deploy LLMs. LLMs standing, that's a mouthful, LLMs standing for large language models. This new product was actually announced a few weeks ago, but just a couple of days ago, Palantir themselves released a product demo video. I will link that in the description below. Definitely go and check that out. It's really, really interesting. It basically gives you a demo of the AIP and it gives you a real work example of exactly how this will work for companies. And I think this has the potential to make even more companies want and purchase Foundry. In the video, it shows how companies are going to be able to use this to basically test out different scenarios, which are going to be accurate with their data. So you could ask the model, you could say that there is this event happening and what would be the best financial move to make sure that X, Y, and Z does or doesn't happen. You can test out different scenarios and it can give you outcomes. And then with them outcomes, you can basically pick which one makes most sense to your business. So this is going to be super, super helpful in pre-planning and preempting certain situations happening. So think of it like a platform that will allow companies to basically manage large language models. For example, ChatGPT. Now, there are a lot of security questions and concerns when it comes to Palantir, but in this product demo specifically, one thing I really, really liked that they pointed out is that it's going to give the company itself the power to decide which access this platform actually gets. So if there are particular data points that a company doesn't want this AIP actually accessing, then they can turn that off. It is customizable. Aside from this release, just a few more general points to say about Palantir and why I'm super excited to add more to this position today is that the total addressable market, so the TAM, is hundreds of billions of dollars. So there's really a lot of opportunity here for Palantir. they're only currently grabbing such a small percentage of that total addressable market. And this is only going to grow as more and more and more attention starts getting actually funneled and put onto big data analytics. So I think the point is that Palantir as a company is very well positioned here to actually leverage its expertise and try and really capitalize on that total addressable market. Some of you guys may have actually seen this if you're shareholders of Palantir, but quite recently Alex Karp did a press release and it was very, very interesting. It was very subtle and there were hints throughout. He basically seemed very happy and very confident with Palantir's performance. And this is the performance that we as the shareholders, as the general public, haven't actually seen announced through earnings yet. He just kind of seemed to hint that good things are coming. But obviously this is all speculation. Who really knows what's going to happen? But he did seem very confident in that press release anyway. I suppose he probably wouldn't come across as really unconfident in his own company. But yeah, go and watch that video and see what you think. So the point here is that I think there's going to be long-term growth probability here. Palantir is now profitable on a GAAP basis. That's pretty big news. If they have 4 quarters of this, of GAAP profitability, then they may become eligible to actually be included in the S&P index. That's very, very big news here. Now, this won't change the company on a fundamental basis. This doesn't change what the company's doing or anything like that. But what it does do is it plays a really important role in the stock price of the company. Institutional money have many rules on how they invest. So for example, institutional money, I'm going to just deem it like that, they're not going to invest into non-profitable companies. So companies that are not GAAP profitable won't be on their radar. They're not going to touch them. And also they're not really going to necessarily be investing into companies that are not included in the S&P 500, in the S&P index. So if Palantir make more quarters of GAAP profitability and they become eligible and they get included in the S&P 500, then this is going to increase institutional ownership. Previously, so we're going back in time here, there were certain rules that a company basically had to meet in order to be included in the S&P 500. You couldn't have founder shares, but that's not the case anymore, so we can ignore that one. But you still do have to be able to show 4 quarters of GAAP profitability, like I just mentioned, and that is still the case. So Palantir so far has had 1 quarter of GAAP profitability. So they need 3 more to get this inclusion. But my question is, why would Alex Karp publicly write a letter, publicly being for everyone to see, about Palantir potentially being included in the S&P if he wasn't actually confident that this would happen? Because he'd look a bit silly if he was to put a public letter out knowing that the potential is really, really small. So I think this probably means that he may already know that they're going to be GAAP profitable in the quarter that they currently know about and we don't. And maybe he has a good inclination that this is going to follow suit for the other 2 quarters as well. If and when they get included in the S&P, there's going to be an influx of buyers. This will then push the stock price up. It's all about supply and demand and that balance. Now, I don't think that you should have too much emotion over this because, like I said, it doesn't change the company at its core. I am not basing my investment today on the potential of Palantir being included in the S&P. I do think it's quite a big deal, but like I said, it doesn't change the company. So it's good news, but don't pay too much weight into that, in my opinion. Also, Palantir, again, they have no long-term debt. They have great cash flow. They have lots of cash available. These are all things I really like about this company, and I've spoke about them before. So do look at my previous Invest With Me videos if you want to know more about why I'm investing into this company. But anyway, with that all said, what I'm going to now do is record my screen and actually buy some Palantir. I have about £510 to play with today. And like I said, that's going to be split between 2 companies, Palantir being one of them, and the other one we'll get onto in just a minute. Just quickly, before I actually do this, I want to let you know that if you want to know what moves I'm making in my portfolio ahead of these videos, so when they're actually happening, then consider becoming a Patreon member. You'll get access to the Discord where we talk every single day about our portfolios and different investment things. It's really, really great over there. So do check that out if you're interested. With all that said, here we are on my Trading 212 account. So let's waste no time. Let's just buy some. I'm just having a look here and noticing that in the last week, Palantir has been dropping. Yeah, so it's at quite a low point right now. Current price $7.81. My average price is actually $7.92. So this is a good price to be buying at. But to be honest with this company, it's in such early stages that I'm happy to continue buying, probably up to about $20. I don't know if that's the accurate amount yet. I've not really put too much thought into that, but very happy with this price. So let's click buy. And then what I can do here is I can decide to buy based on value or number of shares. We're going to do value today. And what we're going to do is we're going to put £205 here. And that's going to get me 32.7 shares. So let's review that order. You'll see that there's a slight FX fee. Happy with that. And then send buy order. That is always so exciting for me. No matter how many times I do this, it's the biggest buzz ever. It's so fun to actually buy these shares and see my wealth building in my head. So that will go through because the US market is currently online, and we'll check in with that in a bit. Now, I'm sure any of my Patreon members that are watching this know exactly which company is coming up next, because we've been speaking about this a lot on Discord recently, but it may not surprise you either. The company that I'm going to be buying more of today alongside Palantir is, of course, Tesla. The price right now of Tesla is such an opportunity, in my opinion. As a long-term investor into this company, you know, I want them for many, many years. I want my average buy-in price to be as low as possible. And at the current prices, I really want to add to this position so that I probably don't end up adding more when the price goes up, which I'm confident it will. Not financial advice, this is just based on my own research. So recently we have had Tesla earning call, and that has really created a lot of noise, a lot of panic in the market. And I think this has really driven the stock price down. And the earnings call was a mixed bag, really. There were some good points and some not so good points that a lot of people really honed in on. I'm going to link the earnings report in the description below. Definitely have a look at that if you're interested in investing into this company or you already hold this company. These were included in the earnings report, but if you look here, you can see two graphs. It shows you the operating margin as a trailing 12-month period. And you can see that versus the auto industry and also the S&P 500. And you can also see year-over-year revenue growth here. I just want to point out that the operating margin, although it's come down slightly from the previous quarter, we can see that little dip here, it still remains the best in the industry, even though there's been price cuts. That's got to count for something. And it's still so powerful. Look at the growth from Q1 2019, where it had negative operating margins, and how much it shot up to the point of now. I think that is some insane growth there. And also a similar picture with the year-on-year revenue growth. It's still very, very strong. Yes, it's been dipping, but there are reasons for that that we'll probably end up discussing in just a minute. Graphs 1, 2, and 3 here all show the bigger picture. Now, what you can see is there's growth increases over time. If you look at the short term, so if you look quarter to quarter, you can see some real volatility. This is a very volatile stock. But I think this points out that they are a strong company over time. You can see these trends happening. Vehicle deliveries are going up over time. The operating cash flow and the free cash flow, yeah, it dips sometimes, but over time there is this pattern of it increasing. Similar thing for net income and adjusted EBITDA. Over time, it's going up. And I think this is pointing out to us that the demand is still there. The cash flow is still strong. The income is up and the EBITDA is up as well. A few interesting things were pointed out on the earnings call by Elon Musk, who basically emphasized that there is a really uncertain macroeconomic environment right now. And this could impact people's car shopping plans. He said that he expects a 12-month period of stormy weather. And he said that every time the feds raise interest rates, that's the equivalent to an increase in the price of a car. So what he's basically saying is that in current times and uncertainty in the economy as a whole, so this isn't a Tesla thing, this is a macroeconomic market situation. When this uncertainty and interest rates rising, all of this stuff is happening, then people might not actually want to use their capital to purchase a new car. They may put it elsewhere. And that happens. There's going to be periods of time that the economy is going down and it's going up. Tesla is positioning themselves in a way that when the market starts going up again, they're in a good position to profit from that. And another really important thing that he actually pointed out here is that he said, we've taken a view that pushing for higher volumes and a larger fleet is the right choice here versus a lower volume and higher margin. Lots of people are really panicking about the price cuts and the decrease in margins right now because they believe that that will then knock onto profitability and impact the shareholders. But I think they're being quite smart here because as far as I understand, what Tesla is trying to do is gain as much market share as they possibly can. And if that takes a hit to the profit, they're okay with that. If that takes a hit to the income and revenue, they're fine with that. Because what they're trying to do is gain as many people driving Teslas as they possibly can so that when autonomous driving becomes a real thing, they will significantly benefit from that. And they've always said that their number one mission is to make affordable electric vehicles for all, for the mass public. It's literally been their mission to do this. So I'm not sure why people are so shocked and disappointed with the price cuts when they've always set out to do this. Now, I know that the earnings report and everything that happens with Tesla can be very emotionally draining, but always just dive into it a little bit more, see why things are happening and what the outcome of that may be, not just for the short term, but for the long-term business of Tesla. Another thing that I want to point out here that was quite overlooked in my opinion, I haven't really seen this spoken about in that many places, but Tesla Energy did really, really well and is doing really, really well. The revenue from Tesla Energy, now this is just a subsection of Tesla as a whole company, was up by 148%. Comparing with the same period last year. They reported that their energy storage system deployment has increased by 360%. That is incredible growth. And Tesla Energy includes a few different products, so look that up if you're interested. You can just look on their website or just simply Google it. But also what I want to show you is this graph here as well, which shows you the quarterly revenues of Tesla by segment. So you can see how much each different element of Tesla is actually growing over time. Another point that I picked up from the earnings call is that the Cybertruck production is really underway. They've got a delivery event expected in Q3 2023. That is next quarter. That's big news. Also, Cathie Woods. We know she is a big bull on Tesla. She loves this company and has seemingly very crazy price predictions, but she's come up with another one very recently. So she gave Tesla a base prediction of $2,000 per share by 2027 and a bull prediction of $2,500 per share again by 2027. This is post-split predictions too. So this would be more than a 10x from now in just a short time period of 4 years. Now you've got to decide whether you think this is likely, whether you believe it, whether you want to make your own price predictions, and you have to use logic and reasoning, not emotion. Not what you want it to be, but what you actually think it could be. And you really do have to make your own mind with Tesla because it's a very volatile stock and it will really, really take some commitment if you're going to hold this for the long term. Now, I think Cathie Woods is using full self-driving and robo-taxis as the main driver for this high prediction. So she's basically saying that she thinks these two things are going to happen very, very soon. And they will be profitable straight away, and that will have a knock-on effect to the stock price. I guess that's what she's saying. Of course, I'm not Cathie Woods, so I don't know. I imagine there are a lot of regulations that Tesla are going to have to meet before full self-driving is fully used. And I don't know if all that's going to happen in just a really short time period. I definitely think they're going to get there and they're going to do it, but I'm not sure on the time frame here. And of course, Elon Musk has been predicting this year to be the year for full self-driving for quite a while now, so I don't really know when it's actually going to happen. So now it is time to actually go and buy more Tesla. On my account left, I have £305 of available cash to use, so I'm going to put it all into Tesla today. We can see that over the last 1 month, you know, it's really dropped. So this is a good price. My average price is $180.45. So picking some more up for $163 today is really, really good. So let's just buy some. We're going to click buy. We're going to put £305 in, which is going to get me 2.31 shares. Now I might need to go down. Yeah, I'm going to just put 304 just because of the FX fee. So review that order. It's going to cost me 46 pence in FX fee. So let's send that now. Woohoo, we've done it. So let's just check. We'll go back to Palantir. Okay, so that has gone through. So now I own 140.94 shares of Palantir and now 25.07 of Tesla. I apologize for this video being quite long, but I think it's quite interesting and kind of important that I explain why I'm making the investments I'm making. So I hope you've enjoyed it. If you've got any questions, leave them below. Like I said, check out the Trade-in 2-on-2 link in the description and consider becoming a Patreon. I really hope you've enjoyed this video. I'll see you in the next one very shortly.